Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Insight. Well, I want to talk to you and stay on the topic of taxes. And as I'm here in the mountains and I'm sharing with you a mountainous look, taxes are going to be mountainous over our lifetimes. And one of you had inquired, and I think this is important to share with all of you as I glean my insights to share these insights with you to become your insights. This gentleman was 66 years old, and he had talked about living unlikely the need to live on $100,000 a year. Now, I realize some of you may not live on $100,000 a year, but the reality is you eventually will, based on just the cost of living and the increase that it will take to live longer and longer and longer. And in this particular case, we ran a tax savings analysis that this gentleman could not believe. And it doesn't matter whether it's under Donald Trump, who just revised his tax plan higher, or under Hillary Clinton, who's mincing no words that her tax is definitely going higher. Many of us will be subject to paying a third of our income in taxes, not to mention the tax that will prompt on our Social Security. So the visual example I share with you in this week's Hidden Wealth Insight, I think, says it all. This gentleman in a 35% tax bracket, whether it's there now for him or you, or eventually gets there, especially over the next decade, will subject this gentleman to having to take out $153,000 to net $100,000. And if you look at my visual example, you'll understand with he being 66, that money will run out at about age 74 and a half. In essence, he will not just lose his lifestyle, he will lose the entire value of his $500,000 IRA. This assumes that tax rates do not go up over this roughly 10-year period, and it assumes, 8.5 years to be exact, and it assumes that the market doesn't lose. And the only way that can be important to protect and safeguarded is, number one, having your money in a safe saving solution that only participates when the market goes up. It does not participate when the market goes down, which no traditional IRA will provide. And number two, eliminates the IRS from your IRA from even taxing it, not just on the growth, but not taxing the distribution based as income. And I think you'll find this very important. I ran this at a conservative 7%, which many of you have said, well, I don't think I've even averaged 7%. This is the low end of what our clients have averaged for the last 10, 20, and 30 years, and it's all tax-free. So please pay special attention to the fact that this money is gone in under 8.5 years, and that assumes no higher tax rates and assumes no market risk of loss. Both of these can be eliminated. I'll be teaching this Tuesday. Go to retirementprotected.com. That's retirementprotected.com. And you can register and attend. There's no cost or obligation, but I want to teach you because I've had several inquiries just over these last few weeks that have said, Chuck, this is unbelievable. I had no idea that the amount of money I have saved in these tax deferred accounts is the tax I'll pay over my lifetime at least. So if you've got $500,000 in your 401k and you haven't moved it, or your IRA and it's sitting there, you'll pay that much in tax by the time you are done living. And then that money will be taxed again upon your death after the second spouse passes. Let me teach you how to eliminate that and pay special attention that the IRS, is it ours or theirs? Because theirs, the word theirs cut in half spells the IRS, and I can assure you, as a client said, boy, they've got a plan. I need to have a better plan, and I want to teach you how to have your hidden wealth solution to get the government out of your retirement. Here's to your hidden wealth solutions.